To start 2026, the financial world is witnessing a dramatic decoupling. While the S&P 500 and the Dow are stumbling through a rough opening, Bitcoin, gold, and silver are shattering all-time highs. This divergence isn't a fluke. It's a reaction to a perfect storm of institutional instability and a shifting global economic narrative. The stock market's reality check. After the record-breaking highs of 2025, U.S. equities are hitting a wall of valuation fatigue and regulatory headwinds. Several factors are weighing on Wall Street. Bank earnings disappointment. The 2025 Q4 earnings season kicked off with a thud. Major players like JP Morgan, Wells Fargo, and Bank of America reported mixed results with higher-than-expected costs and cooling revenue growth. Regulatory fear. The Trump administration's proposal to cap credit card interest rates at 10% and the introduction of the Credit Card Competition Act have sent shockwaves through the financial sector, dragging down the Dow. Sticky inflation. December's CPI came in at 2.7%, matching November, while not a spike as high enough to suggest the Federal Reserve won't be rushing to cut rates as aggressively as the market previously hoped. The flight to safety and the Fed crisis. The single biggest driver of the current market chaos is an unprecedented independence crisis at the Federal Reserve. News of a federal criminal investigation into Fed Chair Jerome Powell has rattled traditional investors. The markets are pricing in a future where the Fed's autonomy is compromised by political pressure. In times of institutional uncertainty, paper assets like stocks are often the first to be sold, while hard assets become the ultimate refuge. Why crypto and metals are exploding. While stocks bleed, the anti-fiat trade is in full overdrive. Investors are moving toward assets that exist outside of traditional government control. Gold and silver's supercycle. Gold has breached $4,650 Oz, and silver has crossed the historic $90 Oz threshold. This is fueled by a mix of safe haven demand and a commodity supercycle where industrial demand for AI infrastructure is competing with monetary demand. Bitcoin's resurgence. After a period of consolidation, Bitcoin has surged past $97,000. It is increasingly being viewed by institutional funds as digital gold, a hedge against the very sovereign risk currently plaguing the US dollar and the Fed. The debasement trade, with US public debt now exceeding $36 trillion. There is a growing fear of currency. Debasement investors believe that, whether through inflation or political mandate, the dollar's purchasing power is under siege, making finite assets like Bitcoin and precious metals more attractive.